Yeah, welcome to another video. So in today's video, we'll be solving this nice problem on non-for-profit making organization. So this non-for-profit making organization, which is Beggars Football Club, they are not engaging in trading activities. So this will make our work even more easier. Now, you can see the receipt and payment account and additional information. Also, we are asked to prepare income and expenditure account, then statement of financial position. But I said this in my first video under introduction to non-for-profit making organization. And what I said was that when you are starting your preparing your account, the first thing to do is the statement of affairs to determine your accumulated fund. Now, this is the name of the club. So, statement of affairs as at is for the beginning, which is 1st January 1998. 1st January 1998 is similar to our balance sheet. So we'll start with non-current assets. Non-current asset is what we usually call fixed asset, but now it's better you call it non-current assets. So our non-current asset at the beginning, we only have equipment, which is 7,360. Then we move to current assets. The first current asset you look at is your balance brought forward, cash in hand balance brought forward, which you find in your receipt and payment account. That this is it, which is 2,000. So we have cash in hand, and that is 2,760. After that, we will look at this. What other current asset do we have? We have subscription in arrears. We are talking about subscription in arrears. Some of the members are still owing, so they are like an asset to us. We can collect it at any time. Do you get it now? So it's subscription in arrears, which is current asset. I hope you understand my explanation. That is 600. Subscription in arrears again. When we are talking about subscription in arrears, it is amount due for members to pay but is yet to be paid. And this amount is a liability to them while it's an asset to us because they can pay it at any time. So we record it as an asset. What other thing again? We have written the cash in hand, the subscription, and that's all. So let's add this up. This gives us 0, 6, 13, so 3,360. When we add everything up here, we are going to have 0, 12, 7, and 10, 10,720. We'll move to our current liabilities. For the current liability, we are starting with insurance accrued. So this is for the business, for the club. The club is yet to pay. The club is still owing this, so we have an obligation to pay. An obligation we simply refers to as liabilities. 150 at the beginning. Then we have subscription in advance. In advance, that is also a current liability. Reason is that this amount have been paid. Amount for next year, subscription for next year have been paid by one of the members during this current year, and they can demand for that money at any time. So it is a liability to us because we have not yet offered the service. Do you get it now? So we have 170. Then transport in arrears, which is 43. It's the same explanation with that of insurance. Now, when we add this up, we are going to get 3, 11, 16. Then we have 363. Let's subtract this. When we subtract this, it's going to give us 10,357. 10,357. So the difference between your current assets, sorry, your current, your non assets, let's just say it together. Your assets, non-current asset and current asset is equals to assets. So our difference, the difference between the assets and this current liability is equal to our accumulated fund. Now, having done that, let's move to the next part, which is the income and expenditure account. And expenditure account for the year ended. So for the year ended 31st December 1998. Now let's start. We are starting with the incomes. We are writing the income first. Now looking at the subscription, we have some adjustment that we need to make under subscription. So let's make the adjustment shortly. For subscription account, so that we know the amount of subscription that we are going to write into this. So before you prepare your income and expenditure account, you need to compute your subscription, or you can just do that in your calculator. It's not compulsory to write it down since it is not part of what we are required to do. But these are the things that you need to know. That's why I'm writing it out. Now let's start. We'll start with the cash. The cash subscription is the amount we can of subscription that we are seeing in our receipts and payments account, which is 6,920. Now, subscription in arrears at the beginning is the subscription owing, the amount you are owing at the beginning. But don't forget, what we are working for is for this year, 1998. But at the beginning of the year, it simply means that it's not for that year because we have not even started any trading activities or any activities during that year. Because you can see that 1st January 1998. But at the end of the year simply means that the amount that is owed during that year, but at the beginning is not for that year. That is the balance of last year which was brought to the beginning of that year. That's what it simply means. So subscription in arrears at the beginning is not the amount you are owing for that year, it's the amount the members are owing for last year which was brought forward to that current year. Therefore, since it's not for that year, you are going to subtract anything that's not for the year. You are going to subtract it, brought forward, which is 600. Anything that is not for the year, you subtract. Now, subscription in arrears at the end, 530. At the end, it simply means that during the year. So during the year, we are going to add it owing, which is 530. Now let's move to the other one, which is advance. Advance simply means prepaid. At the beginning, at the beginning of the year, an amount was paid in advance. Subscription was paid in advance 170. When subscription is paid in advance at the beginning, it simply means that it's for the next year, right? So at the beginning of this year is the end of last year. The end of last year is going to be the beginning of this year. Note that in accounting, end of last year is going to be the beginning of this year. So this amount 170 was paid at the end of last year. This simply means that it's for this year, which is 1998. That's why you can see it at the beginning. So we are going to add it, and that is 170. And prepaid at the end. This amount was prepared at the end of the year. So you prepare this amount at the end of the year. It's not for that year anymore. It's for the next year. You know, prepaid means advance. It's not for that year. It's for the next year. So we are going to subtract it since it's not for that year, and that is 180. So anything we are subtracting and putting it inside bracket. Now we have 6,920 minus 600 plus 530 plus 170 minus 180. This gives 6,840. So this is moving to our income and expenditure account. So for our income and expenditure account, this is going to be our subscription. Now we have subscription, 6,840. Do you get it now? Then the next income is donations, which is 5,000 naira. So we don't have any other income. Let's add this up. 840, then this gives 11. So we have 11,840. Let's move to our expenditure. So we are going to start with printing, the one at the credit side of the receipt and payment account. Printing. So for the printing, we have 1,720. Is there any additional information? No. So that is how you are going to be looking at the transactions. Then we move to the next, which is insurance. Is there any additional information on insurance? Yes, we have insurance accrued. Now, how do we compute that? The insurance we have at the receipt and payment account, that is 350. We will write it here. Then insurance accrued simply means insurance owing. At the beginning, I said any amount you are owing at the beginning of the year is not for that year, is for last year. It was now brought forward to this current year. So it's for last year. Anything that is for last year, you will subtract it from the cash. Anything that is for this year, you add it to the cash. That's the logic. So since we know that this is for last year, subtract it from the cash, we have minus 150. And for the other one, which is 130 at the end of this year, so during this year the amount was owed during this year, you add it to the cash, which is 130. And when you compute this is going to give us 320. Let me confirm that: 350 minus 150 plus 130, 330. We move to the next, wages and salaries. The wages and salaries, that is 455. Refreshment, which is 625. We have electricity. Electricity, that is 470. Then we have transport. For the transport, that is okay, there's an additional information for the transport, and let's compute that. We have the cash to be 360. Then this transport in arrest and insurance accrued, they are the same. At the beginning, we are going to subtract because it's not for that year, for previous year, and at the end you are going to add. So they are the same. Just use the same logic to answer it. 360 minus 43 plus 56, 373. Now let's look at the other part. We have rent, rent, which is 525 now. So rent 525 now. The other things that we are going to look at is, do we have a depreciation? So let's note that first before we continue, because that part is also a tricky part. Now, if we look at this, we have equipment at the beginning. So let's compute this now. For instance, this is your equipment account. We have equipment at the beginning, which is 7,360. During the year also, we bought some equipment. That's why you can see it in the payment side of the receipt and payment account, which is, so let's add another balance to it. That's 2,320. When we add this up, 2,320 plus 7,360, this give us 9,680. Now we have balance the equipment at the end. The equipment at the end is what? we have 8,240 as the equipment at the end. This simply means that there is a depreciation because this amount has reduced. Can you notice? Therefore, the depreciation is going to be the difference of these two, which is 9,680 minus 8,240. That's 1,440. Do you understand the logic now? There's a depreciation there. It was not given to us in the question, but when you look at it very well, it shows that there's a depreciation. But because the asset at the end should be the additional of these two. When we add these two together, we got this, right? And we see that at the end, this was written, which shows that the depreciation of 1,440 was included. Now, we are bringing our depreciation to this part, which is depreciation of equipment 1,440. Now, 1,440, we are going to add it up. So let me erase this. I hope you understand now. Adding everything up here, 1,720 plus 330 plus 4,000. This will give us 5,938 naira. So 5,938 naira. Let's deduct it from this. Minus 11,840 is going to give us 5,902. So 5,902 represents surplus. The surplus of income over expenditure. That is, our income is higher than expenditure. So we have surplus of income over expenditure. Now the surplus is what? 5,090 now. Then we'll move to the last part, which is the statement of financial position. Statement of financial position as at 31st December 1997. Sorry, 1998. So for the statement of affairs, we are starting with our non-current assets. Non-current assets. The non-current asset we have there is the equipment. Equipment. And for the equipment, the amount or the computation of this is, we solved it the other time. At the beginning, we have 7,360. Then during the year, we bought some equipment which worth 2,320. Then we made a depreciation. The depreciation we calculated was 1,440. Therefore, the amount or the value of our equipment at the end is going to be that amount, which is 8,240. Do you get the logic now? Now you can try it. Then we'll move to our current assets. For the current assets, we start with cash in hand. Cash in hand, which is cash in hand at the end, represent the balance carried down from our receipts and payments account. 7,855 naira. Also, we have subscription in arrears. I explained that earlier. And that is 530. What other current assets? Let's look at it carefully. That is all. So let's add this up. We have 7,855 plus 530. This will give us 385 naira. Then we'll add it up with this. The total is 16,625. After that, we'll move to our current liabilities. So less current liabilities. Current liabilities, we are starting with insurance accrued. Just accrued, that is 130 at the end. After that, we have subscription in arrears, sorry, in advance. So for in advance, we have 180. After that, transportation. In arrears. Transportation in arrears, that's 56 naira, 56 naira. After that, nothing else. So let's add this up. When we add this up, we're going to have 130 plus 180 plus 56. This is going to give us 366 naira. So let me check the other marker. We have 366 naira. So this amount, we are going to deduct it. We are going to less it. 16,625 minus 366 naira is going to give us 16,259 naira. Now let's look at the amount we used to finance this. Financed by. So the finance by, we are starting with our accumulated fund. Then we add our surplus. That is the total amount we use to finance the surplus. So for the accumulated fund, we got that in our statement of affairs at the beginning. We saw that the other time. And the amount is 10,357 naira. Then we have our surplus. Our surplus, I've written up here, which is 5,907. It gave us the same amount, 16,259. Now, this is the happiest moment of an accounting student when your trial balance, when your balance sheet, which is statement of financial position, balanced. So I'm very happy. Now you can see the problem. We solved it together, and I hope you understand. Please don't forget to like, share, and subscribe to my channel. Thank you for watching. Bye.